Saturday, October 14th, 2017. Monaco64 here. So today I want to look at gold and silver and how they've bounced off the golden mean or the golden ratio, and look at the technicals for gold and silver. And what is the golden mean or golden ratio? Well, I'm going to put up a video up in the cards right now. Really interesting video, has over 2 million views about the golden ratio, and it's entitled, "Why is 1.618034 so important?" And it's a channel called Strange Mysteries, and I highly recommend you watch this video so you understand a bit more what I'm talking about. I've looked at it's also called the Fibonacci Retracement, and he'll talk about Fibonacci as well in the video. But it's something we follow in the markets, the retracement levels. So, and I found it interesting that I noticed a few days ago that gold and silver had bounced off the Fibonacci retracement. Not recently, but back on the 6th of October. And that was the 61.8 retracement of the move from the 10th of July at a low of 1205.41 to the high on September 8th at 1357.09. So the 61.8 retracement was 1263. And I know we went a bit below that. We got to a low of 1261. But as you can see in the chart, is very, very close. And, you know, and Fibonacci, the golden mean and or the golden ratio, it's got a lot to do with what happens in nature and mathematics. So, and the same thing applies to markets. You'll see what I mean when you watch that video. So as you can see, we bounced off that 61% retracement in the markets. That's a very important, excuse me, level. And it doesn't happen all the time. We could have gone, more through it and it wouldn't have looked perfect. But this is pretty much perfect almost. And usually, once we bounce off that ratio, 61.8, we see kind of a consolidation between 61.8 and the 50% retracement. But we haven't. So we've gone right through the 50%, and we've also gone right through the 38.2% retracement. As you can see, we closed above 12.99 yesterday at 13.03. So it's looking really interesting, the gold chart. And then I thought, oh, let's go and see if silver did the same thing. And because I was curious, and this was about a week ago. And lo and behold, as you can see there, silver has done the same thing. We went from the low on the 10th of July as well. Sorry, yeah, 10th of July at 1520, and we made a high in the beginning of September, 8th of September at 1822, roughly 1820, and then we retraced like gold. We had that correction that was quite sharp, and look at the chart. We almost perfectly at that 61.8% retracement, just a little below like gold, but it nailed that golden mean. And silver as well has not stopped to consolidate, between the 50 and 61.8 or the 50 and the 38.2. It's just blown straight through it, through both the 50 and the 38.2. So silver also looking pretty good. And now I'm going to look at the moving averages for gold and silver. My friend, the Maestro, has been looking a lot at the silver moving average, and I will look at that as well. But first of all, the gold moving averages. So this is 50 is the black, 50-day moving average. The orange is the 100-day and the green is the 200-day. So as you can see, the 50 is comfortably above both longer term moving averages, and that's bullish. And they're all three are moving, up. And we also closed above the 50-day moving average at 1303. So that's looking pretty good there. And Brian has really been the maestro. I'll put a link to his channel below. He has really been looking at this moving average closely, because the 50-day moving average is just about to cross the 200-day moving average in silver, and has been following that for a while. And as you can see in this zoomed in chart, we're very close to that. And the other positive thing that Brian notes is that the 200-day moving average is starting to become upward sloping as well. So that's looking pretty good for silver. So I've got another silver chart, the moving average, a bit more longer term, because I just wanted to zoom into that. And as you can see there, we're also above this trend line in silver. We've broken back above that. And as you can see, back in April, that was the April last year was the last time silver really made a big run, from around 15 bucks to all the way to 21 in July. And you notice how the 50-day got above, the 100-day and the 200-day. The 200-day still, the 100-day still needs to catch up to the 200-day. We want to see that orange line also get back above the green line. But as of now, though, this is called a golden cross. We need to see the 50-day move above, the 200-day, and that's very close to happening. We've had the Fibonacci confirmations as well, so it's looking good as well, the silver chart. And now looking at the ratio, gold-silver ratio, and I've said many times that for the precious metals to have a sustained rally and to be bullish, we need to see silver outperforming. And I just wanted to bring up a long-term chart of the gold-silver ratio, going back quite a while here, all the way to, beginning, I think it's January 1915. So just before, just after the Fed was created, that, instrument of debt creation. But as you can see here, look at the ratio, how it dropped in December 1979. It went back to like almost 14 to 1. And that was, December 79, January 1980. That's when gold topped at $887.50. And you had silver spiking to $50. The Hunt brothers, the dollar, very weak. Later on, Volcker had to raise rates to defend the dollar. He let rates go to over 20%, short-term rates. And that's when precious metals topped. So that ratio bottomed. And then if you go to 1990, there's not much to talk about there, but you can notice that the ratio seems to go up or top in times of recession. Not all the time. But anyway, looking here, let's see, 2003, the ratio was around 80. And all that means is the price of gold divided by the price of silver. So it was pretty high there at 78, 80. And then, it dropped all the way to 31, April 2011. And that was just before gold made its all-time high at $1,920. Silver made its high just below $50, a bit before gold. So that's why the ratio bottomed in April instead of September. And ever since then, the ratio's gone back up, and we've really been testing that 80 level recently. But it looks like a triple top. And historically, if you're going to say that gold and silver are, overbought or, that they're due for a correction, you'd have to see that ratio spike lower. As you can see, every time, 2011, ratio spiked lower. Even, in 2008, the ratio spiked below 50 when gold went up to $1,000. And also in 1997, 1999, when gold made a low around 250, that ratio dropped below 50. So if anything, that long-term chart is telling us that gold and silver are not overbought and they're due for a big move higher, and I expect silver to outperform. So now let's have a look at the shorter term charts, which Brian, or the master, has been looking at quite closely. And he noted that the 50-day moving average, which is the gray line here, is almost moving below the 100-day moving average in the ratio. This is the chart of the gold-silver ratio, which would be a death cross, the opposite of a golden cross, I guess. So that's starting to move lower. And what that means is that silver is starting to outperform. And when that happens, usually, as I saw earlier, it's precious metals as a whole, gold and silver, move higher. And I was listening to Brian, or the Maestro, yesterday. He had like a live chat on his YouTube channel, and I said to him, oh, it looks like a head and shoulder on the ratio, and he couldn't really see it, but I've got the chart here, and as you can see clearly, there's a head and shoulder there, which is, if we break that neckline, which seems to be basically around just below 75 on the ratio, we could see that, the ratio move lower, and that would confirm, a move higher in precious metals being led by silver. And what about price targets? I'm not going to make, predictions of huge prices. I'm just going to go with, realistic prices. Gold, I think, 1375, the 76 area, which is last year's high. Very, very, possible or improbable before even, the end of October, I would say. After that, we have to see 1400. Silver, same thing. The short term, we need to break above the beginning of September high of around 1820. But after that, like Brian's been saying, he thinks we could get to 21, which was last year's high, before year end. And I think he could be right, and maybe even higher. So there you have it. That's the technical picture for gold and silver. Please watch the video in the card above about the golden mean, or the golden ratio, or the 1.618034 number. Very interesting. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet, and you can also watch me on steemit.com and follow me on Twitter. And I'll talk to you later. Bye.